Alrighty, guys, we're going to talk about bankroll management, which at some point you're going to want to look at your P&L. I don't usually recommend new traders look at their P&L because it's really not a good idea, because then you start trading your P&L and shit. But at some point, I think it's a good idea to manage your bankroll or to manage your money. So the way I see it is every day I start off at 0. And then, there's obviously a daily drawdown. When I was trading exclusively 4 lots, it was 1,500. And the way I calculated that was trading on sim for a long time. I figured out where on my green days, what would I on average draw down before I had green days. So I would look at all my green days. What on average would I draw down before I turned it around? And then I obviously added a little padding into that. So when I was trading exclusively 4 lots max, fluctuating between 2 to 4, it was at a $1,500 drawdown daily. And then once I added 8, it went to 2,000. So when I was trading 4 lots, I could afford 2.5 stops, full stops right off the open before I'd blow the day out, because each stop at 12 ticks is 600. So, times 2 is 1,200, and then I only get half of that before I hit the 1,500. So if I'm hitting a full stop right off the open, I can't really be doing that again. So that's where I would scale down size to sort of manage the P&L. But that's the thing. I don't ride trades into my stops, right? I'm trying to cut by hand. It depends on the setup too. Some setups I'm willing to risk a max stop. Some setups I'm even willing to risk hitting the actual drawdown on the day if the setup has an extremely high expected value and a high risk-reward ratio on it. So, it was at 1,500. Again, on demo, I kind of knew where I would turn the trading day around on green days. And it's the same way I kind of figured out what my stop should have been. I traded a lot and I figured out, what's my average MAE, which is how many ticks the trade goes against you. MFE is max favorable excursion. That's how many ticks it goes in your favor. So when I first figured out where I could work, which I did a lot of 6-tick stops for the longest time. Then volatility came into the market, and then bumping it up to 12 helped substantially. But I would look at my stats, like on average, where are my winning trades, not the losing trades, where are the winning trades dipping in? And the same thing goes for my max drawdown. Where am I dipping in before my green days are green? Like, how far does it go in? So that's how I figured it out. It's a lot different than what other people preach with R's and shit. So I'm still so stupid. I have no idea how. I know the math and it's been explained to me, but I just don't do it that way. I've never done it that way. This is how I do it. So, we bump it up to 8 lots. That's $100 a tick. So I couldn't do a $1,500 stop anymore. So I bumped it up to $2,000, which is really tight because that's a $1,200 stop times 2. That's $2,400. So hypothetically, that when I started trading 8 lots, I should have moved the drawdown more because I don't get 2.5 like I did on 4 lots. But I just added a $500 buffer because obviously 1,200 is way too tight. That is way too close to 1,500. And if I get hit on an A lot right on the open and take a full 12-tick stop, I need to throw this little B-roll footage in real quick. I only was using 8 lots to size up A plus trades. That's why the stop was still a little bit tight. So 8 lots was never intended for everyday usage or just regular size. So I need you guys to understand that. Again, I'm not trying to hit it. I'm not trying to take a stop right off the bat. Like, I mean, like if I do, I need to scale down size. So if I get hit, lose 1,200, then I'm going to scale down size. Even if it's like a high quality setup, I need to scale down size. So I need to go to 4 or 2, depending on how high quality of a setup it is to fix that problem. So one thing I do is when I'm getting whacked right off the bat, I need to immediately start fixing problems, which I'll get to here in a moment. But I want to keep talking about like this max drawdown and shit. So again, never try to hit. I try not to get stopped. There are certain circumstances where the stop is worth getting hit. If it's like a 5-to-1 risk to reward ratio and the expected value on it's like 4 or 5, and I can't really fight into it tightly because of the way the market's chopping, I'm going to try to get as precise as I can on entry. And then if I need to give it room to breathe, I'll give it room to breathe. If I know that there are certain areas between my stop and my entry that could pivot the price back up, then that's going to give me more confidence to actually risk a full stop, because there's going to be some areas under it that could pivot it back up. Which obviously, knowing when to risk a stop, when not to risk a stop, that's more advanced shit. And you should, that's when you got to really understand. I mean, this is a more advanced topic. That's when you got to really understand what the setups are. So I try not to risk getting 12 tick hits, but it happens. Sometimes it pukes. So, you know, if I have a $2,000 drawdown, that leaves, so if I take a full stop on 8 lots right off the open, that leaves me $800 to work in. Obviously, there's commissions attached to that. So I actually leave my P&L up. So I'm watching the P&L, which again is not a good fucking idea. There's got you more advanced video here, but at some point, you need to be so desensitized to the money and the P&L that it's not fucking with you. But I think it's imperative to watch it to be able to manage problems. Because there's times where I'm okay. There's times where I'm okay and I'm, you know, up, you know, maybe $2,000 or whatever. And then there's a really good trade, but then I start to overfight for it. And then I start taking a bunch of paper cuts. And there's been plenty of times where I've taken paper cuts and I've pissed away almost all that $2,000 because I was overfighting and I didn't have the P&L up, so I didn't realize how badly I was fucking myself on these paper cuts. So that's when I come to realize I do need to watch the P&L at some point to actually manage it. And it's not like looking at it to revenge trade. It's more of managing the P&L in the sense of I might need to fix a problem, or I might be in trouble here if we don't scale down size, or we maybe need to like not take B trades and wait for an A trade to fix this problem. Maybe I'm down 1,200, right on the open. But then there's another high quality trade. So what I'll do is, if that high quality trade sets up and it's instantly working out for me, I want to maybe not run the full thing to target, right? Most of the time, my trades don't go all the way to target. Maybe at the first scale out point, I want to take more off than I normally would. I want to do everything in my power to pay for that $1,200 stop and maybe lock in a little bit more profits. Now, if I didn't take that stop, then I would be more aggressive at running more size to targets, or maybe not scaling it off sooner or taking the whole trade off sooner. So I'm always trying to fix a problem, because if you don't, then you can really get in a lot of trouble. For instance, let's say I take a $1,200 stop right on trade 1, and then trade 2's working, and it's a really good trade, like high RR, high EV, but all of a sudden, you know, it all comes back, and I have to cut it. I have to cut it. I can't risk taking a stop, because if I take a stop, that's another 1,200, and then I'm screwed. So even though trade 2 might be a great quality trade, since I took a stop out on trade 1, I can't take a stop out on trade 2. Otherwise, I'm going to hit the drawdown. So therefore, I'm going to have to break even, or cut it for an even smaller loss. And if I cut it for a small loss, well, then that just simply adds on to the 1,200. Maybe I take a two tick loss. Well, on 8 lots, that's $100 a tick plus commission. So then that would go to, you know, 1,400. And now I'm only working with $600 before I hit the drawdown. Less than that, actually. So now I'm really getting in trouble here. So on trade 2, even though it might be high quality, I want to try to pay for that stop out that happened and then some, maybe a little bit of extra. So I pay for this, you know, maybe I get in it and it's up 1,200, and then it's up an addition, you know, maybe it's up 1,400 or whatever. I might be inclined to just cut the whole fucking thing. So now we're up 200 on the session, because we just fixed that stop out instead of letting it run the target. Because maybe later in the day, there's another even higher quality setup where I want to risk a stop. Well, now I can risk a stop again because I just paid for what just happened on trade 2 when trade 1 was a stop out. You know, trade 1 is a stop out. We lost 1,200. Trade 2, we made 1,400. That leaves us with just 200 in profit or whatever. Well, on trade 3, I can now re-risk a stop. And the same thing needs to happen. That whole fixing problems needs to continue to happen throughout the session, because there's been plenty of sessions where I might be up $4,000 or whatever, and then I give away $3,000 by fighting into a trade, and then I'm up $5,000 on the next trade because I hit a $4,000 win, but I fucking overfought and gave away $3,000 just to make $4,000. Really, I gave away $3,000 to make just $1,000. So this whole 3 steps forward, 2 steps backwards in your P&L is not good. So having these really extreme P&L swings, even though it's steadily going up, like for instance, you know, if you have a P&L, you know, your equity curve, you don't want to be like having swings, really deep swings like this. And I've had plenty of days where that's happened, and then you end the day up there. That's not cool to be like swinging like that. Like maybe there's overfighting going on this downswing, but maybe this upswing is just one solid trade, right? Well, if I'm fixing my problems, you know, we take a hit or whatever. Well, instead of overfighting, maybe I fix that hit on the next trade, and maybe it doesn't go as high, and then we go into the next trade, and then, you know, maybe I'm a little more aggressive with taking off on that trade, you know, and then we take a little bit of a hit, but then on the next trade, I fix that hit, so we're about break even. And then finally we hit a trade that's equal the size of this run up. And then boom, it's like that. So you can see the equity curve is really, there's a huge difference. Oops. So there's a big difference right there between the two. You don't want to have these wild fucking rips on your equity curve. Even when you're up, you know, maybe for you it's $600 or whatever, but there's been plenty of times where I've pissed away, even recently, like a $4,000 day completely, because I'm over fighting and shit. So it's really important to kind of manage that P&L by looking at it. So like, let's draw out that example of, you know, the open. Let's say here's, you know, here we're at $0 here, because every day for me starts off at 0, right? $1,200 loss, right? Well, maybe we think the next trade can yield 3,200, right? And like I was saying, okay, maybe it goes up to 3,200, but we don't scale anything out. Well, if it comes all the way back and I break even, well, I'm still down, you know, 1,200. So if the trade comes back down, well, I'm still down 1,200. And that's not good. So maybe I could scale a little bit off. Maybe we lock in 600. You know, maybe the trade is running, but we scale a little bit off and then we lock in 600, you know. So now we're just down minus 600 if the rest of the trade comes back. So now we're down 600 right here. Well, you know, that's something I could do, but I'm still down. So what I like to do again is if I'm down 1,200 on the open, if I can pretty much immediately fix that stop, and then I notice there's something happening in the market, it's like, could rotate here, something could happen, the expected value of the trade is shifting, let's lock it in, you know, plus 1,400, you know, here's 0, now we're up 200, right? So I'm trying to constantly manage the bankroll. And that's when looking at the P&L really matters. Now, what if there is no high quality setup? Okay. Sometimes there may be no high quality setup to fix your fuck up. Well, it really depends how bad the fuck up it is. If it's pretty bad and we're like, there are no high quality setups or anything, and I'm really close to drawdown, that max drawdown, typically, depending on how far down I am on the session, I do want to wait for the most high quality setups. I want to look for the most A+ trades to fix it. Again, no Bs, definitely no fucking Cs. There are times where there might be really quality scalps at hand, but they have to be high quality scalps. And then I might start fixing problems on high quality scalps, but I'm gonna size down. So if I have a $1,200 loss right off the beginning, maybe I'll scale down the 4 lots or even 2 lots at times and just start basically picking up dimes that just kind of start padding that $1,200 loss and just chip away at it a little bit at a time. It just really depends how bad it is and if there are other quality setups. And the same thing might happen on the open of a session. Maybe I know there's going to be a really good trade that has extremely high RR, extremely good EV. Well, those are the trades I want to fight for. Those are the trades, which I actually had one, what was it, 2 days ago? It was an extremely high RR, high EV trade. And it was one of those trades where I'm like, I'm going to fight for this on 12 lots. And it took me 12 tries to get into it on 12 lots. All right, so here's an example. There was a trade that I had been waiting for, and it had been setting up over the course of multiple days, almost a week. And this specific short for me was a 5.5 risk to reward ratio, like potential of a 5.5 risk to reward ratio. And again, the way I calculate that is I look at how many ticks it goes in my favor, how many ticks it could potentially go in my favor, and then I divide that by my 12 tick stop, and that's how I come up with the risk to reward ratio on it. I'm willing to risk a potential full stop for 5 times that, and that's what this trade was. And this is all me fighting for that same trade, and it also had a very high expected value. It had an expected value of 4, which is really good for me, but it wasn't that it just had an expected value of 4. It's the way that it set up over the course of several days that made it even better. So a combination of really high expected value with high potential RR is why this trade was good, and I'm willing to fight for something like that. The problem is, if I'm going to go into a really good trade like this, which obviously it fucking took how many tries? So this trade took 11 tries to finally get it to run. You could see it almost ran twice, where it went in my favor 20 ticks twice. So this specific trade, and I mean, it doesn't, and on 12 lots, it really doesn't take much to lose quite a bit. You know, losing 450 on a 4 tick, it going against you about 4 ticks or whatever. I'm not sure. I might have scaled some of that out, but same thing up here. It doesn't take much for this, for your P&L to start screaming on 12 lots. But this trade was worth it. This was an A+ trade, so I'm going to fight for an A+ trade. But the thing is, if I know that I might have something of this quality setting up, sometimes I want to start padding the P&L so that way I can afford to fight for this thing. The way this was setting up was there were certain entries where I was willing to risk a stop, but then the EV of the trade shifted, and then I wasn't willing to risk a stop anymore, so I was trying to keep it tight. And then I was really fighting for it because it just wasn't working out as smoothly as I wanted on entry. There was just so much chop on entry. And there was just points where it looked like it needed and this was a short, obviously. It all says sell on all the way down the thing. It says sell. So there's many points on this where it looked like it was going to puke up and it needed to do what I call an inventory flush, where it needs to run up. And for me, it's like, well, it's been chopping so much, this trade is shifting, that at first I would have been willing to risk a stop. Now I don't want to risk a stop. I'm willing to re-risk a stop if it flushes up and then it starts to come back in, because it cleared a bunch of stop orders and shit. And when it's chopping like that, you just have a shitload of stops starting to accumulate. This is obviously a different topic, but for the sake of kind of breaking this down a little bit, you just have a bunch of stops accumulating when the fucking thing's grinding out, you know, for 30 minutes or whatever. That if they press it, it's definitely going to hit my stop at a certain time. So now I'm going to get a little tighter with the trade. And then I started fighting for it again. And I mean, these $150 wins, those are 1 tick wins on, 12 lots, because it's $150 a tick at that point. And you can see, I mean, I had one really look like it was going to work, and then it came back and I had to cut it for a tick. Because there was a point where it looked like it needed a flush. I was anticipating a flush, but then it started to hit a point where, like, this is my best entry. If it doesn't flush, but I need to keep it tight, I can no longer risk a stop. So I got really tight on entry up until this point. And even this one was interesting because the top of the hour was about to hit, and I know at the top of the hour there can be a push in volume that I took off for. and just to get some of it off. So some of these trades you're seeing, I am scalping out a little bit because it's, again, it's the way that I read the price action, how the EV over time, the expected value over time, price over time is expected value. So as it's shifting through the trade, I'm going to start to cut more of it off. I mean, this trade, my initial idea was to hold most of the size all the way to target. I wanted to hold the full 12 all the way to the target, but it kept shifting. It kept shifting. And as it started to hit points where I'm like, oh, this isn't looking so good, I would start taking a little bit off and start cash flowing, you know, 600 here, 450 there, a tick there, 450 here. So I'm starting to take a little bit off because I know that if I need to fight for this and I keep breaking even, well, that's very expensive. So the commissions on this shit can be $42 at this point. So you're looking at about $40 around turn on 12 lots. So like, you know, between these two, I'm losing close to $100. So it's very imperative that I start to cash flow a little bit at some point, because I know I got to fight this thing. And if I'm fighting it now, as I start to fight it more, I need to manage my bankroll. So instead of letting everything become break evens, I'm going to start to take a little bit off to allow myself to continue to fight it, to kind of keep a buffer there. So if it does hit a point where I can risk a stop, I will. But also on this trade, before I got into this trade, I knew it was setting up. So I was hitting other high quality, not as high quality as this trade, but I was hitting other trades that were also high quality before this, and they're not pictured in this P&L. I just wanted to kind of show you guys the actual fighting that can happen and the importance of managing the bankroll here. But before this trade, there were really good setups. Not as good as this one, but they were pretty good to where I could have really squeezed them out, and I could have maybe even got into those trades and ran it into this one as well. So there were other shorts before this one, because on this specific day, Thursday, the 9th of February, it was just a pure down day. There were a few other high-quality shorts that I could have got into, but I didn't want to do it on a full 12 lots because the RR and EV wasn't as good, but they were still good. They weren't screaming like this fucking thing. And I could have held those into this trade, and on that day it would have worked. But I didn't. So before that, I elected to be more aggressive at scaling out the trades before this to build a buffer, to build a couple $1,000 of a buffer. So that way, when I went into fighting for this one, I could still risk stops where I needed to, and then be a little more aggressive at really fighting for it and not worry about giving away too much. So there are times where I'm going to not let a good trade run to target. I'm going to be more aggressive at taking it off, because most of the time my shit doesn't run the target, and most of the time there's fucking problems, clearly, right? This was a bitch to get into. So knowing that, if I know something even better might show up during the session, I'm going to take other good trades and not be as aggressive as running it to target. So I'm going to start building up a padding in the P&L. So that way, when I get to the really good shit where it requires me to scale a full 12 lots, I'll be okay if I get a little beat up, or if I take paper cuts, and even if I risk a stop, because, you know, a stop at this point is, you know, that's $1,800, so that's pretty big. And now that we're at 12 lots, you know, we have a $3,000 drawdown. Obviously, I can't, you know, obviously I can't take 2 stops in a row on 12 lots because that would be 3,600 and we would dip down. So that's kind of the importance of managing bankroll and how I'm going to fix some problems. And even if this trade got really fucking ugly, which it did, you know, obviously there was a loss here. So I you know, I want to start to fix some of it a little bit. If it's giving me a lot of shit, you know, we get another loss here. Let's start trying to fix some of it. So even on these paper cuts, if I notice I'm starting to take a little too many paper cuts, I'm going to start to fix them. And if I took a full stop on this, then I might be more aggressive at actually getting out before target to fix that. Because you really never know if these things are going to just work or not and go all the way to target. So, you know, if I had got hit on a $1,800 loss or whatever right off the clip, well, then on these trades where they did work in my favor at 20, I would have probably, instead of taking 4 lots off, I would have maybe taken 8 or most of it off, you know, a lot sooner to fix the stop and just run less to target. And by doing that, I'm always kind of not allowing the P&L to dip too far against me. So, I mean, there's been plenty of times where, you know, I'm consistent or whatever. And this was a huge problem. And I think this is going to be a problem for a lot of people on their way to consistency. Is you're up. You're up. But then you keep giving the whole fucking day back. And you might be experiencing that yourself. So it's important that I don't have P&L swings where it's, you know, it's like I make a lot, give back a lot to make a lot because I'm over fighting to give back a lot to make a. That's too much. That's too stressful because then you could fuck the entire day and then all of a sudden you give back a lot of it and then it takes one more fucking hit and then you done fuck the whole day and now you're sitting on a big shitter and you fucking. And it's not that you gave back a bunch of money. Interestingly enough, as far as psychology goes, because I listened because I had a breakup in November, and I listened to these breakup coaches, and they what they said, and this is interesting because it applies to trading, is if you got broken up on, you're more likely to fight for that back. Because humans naturally want to fight harder for something they lost than something they might have or whatever, or maybe obtaining it for the first time. So I think it's interesting that happens with other people. And I think the same thing definitely translates to trading, to where we attempt to fight a lot more when we're giving back gains in the market. It's one thing when and that's happened to me, and I've noticed it now that I'm aware of it, is getting up initially in the morning and like on the P&L isn't as big of a deal. But if I lose on some gains, I've noticed more aggression to get those gains I gave back. So I think that's very fascinating to know that happens with other people. And I think that definitely translates to trading. So psychologically, we attempt to overfight for our gains more so than when we're initially attempting to get up. And that's how I've personally experienced P&Ls where I'm up quite a bit and then I fucking just blast the whole day away. Oops, and I was drawing, and there you go. So, again, how that drawing goes is like, you up, and boom, you know. But the thing is, you know, one thing that really helps is having a drawdown playbook is just, if you're newer, don't give away so much. Like, when you're up, let's say you're up 1,000, Make it a goal to, you know, once you give back and you're still up a 600, walk away, just turn it off. So that's kind of a drawdown playbook, and easier said than done. Psychologically, that's hard to deal with, but I think it's important that if you are experiencing those issues, that you need to just walk away and keep locking in gains. Because by you doing that, now we're up 600, okay? You know, this is day 1. All right? And then we have another fucking day. Right? We're up, let's say we're up, you know, 500. Right? But then we give away 300. Right? And now we're only up 200 on day 2. Walk away. Walk away. Because when you combine these P&Ls right here, when you combine day 1 and day 2, your P&L will look like this. Your equity curve over these 2 days, you know, will look like this. Otherwise, if you fuck both of these days up, you know, that could be the difference from it looking like this. You know what I'm saying? So if I had hit my drawdown on this day, you know, we hit our drawdown there and then we hit our drawdown there. I mean, that's the difference between it looking like this and looking like that. And then over time, you can learn how to manage bankroll on the fly. So again, I don't suggest this if you're new. I'd never suggest looking at P&L. You need to learn the skill of fucking trading and developing a system and finding edge and what's an A+ trade and how do I, you know, all that bullshit. Over time, I think it's important for me to stare at the shit, unfortunately. But I have to be my own risk manager. I don't have a risk manager to look at my trades to say, hey. And that's a lot harder to do on your own. So, you know, again, you know, if we're up 4 Gs, you know, we're up 4K, 4 bands. If I take an $1,800 loss, you know, minus 1,800, right? Well, I should start to fix that immediately. I don't want to keep fighting for this trade that still has great risk to reward on it. Because I could just keep fighting my way down and down. And then before I know it, the trade finally works out. And then I barely made what I had. I barely made what I had. And that's happened to me so much. Right? So if I'm down 1,800, so we know we're down 1,800, so I'm going to delete that. I want to start to fix that 1,800, even if that means kind of getting out of the trade a little more aggressively and not letting it run the target. And that'll help. That just helps, right? Versus something that's like that. This fucks with you. You're dipping into mental capital every time it comes down like that. You know, not only are you losing money, but you're losing mental capital that I want to constantly pretend I'm trading at 0. Even as the day progresses, I want to keep trading at 0. Now, if there's some fucking A+ trade that is just screaming at me, which we looked at on that P&L, then yeah, we're going to be very aggressive up until a certain point. Up until a certain point. Then I need to not be aggressive. Then it's like, shit, now we need to just start fixing it. Because the crazy shit about trading, there's an element of luck when it comes to trading. So there is an element of luck. I mean, personally, I don't think the price action is as random as you think, and I at this point, I have a relatively good pulse on the market. I would hope so, being in my 7th year and trading one fucking market. I would hope that I fucking understand it on that more intimate intuition sort of base. But while the market, it can get random, but while it's not as random as most people think, there's still an element of randomness that you're always contending with, right? I wouldn't have fought that short 12 fucking times. Or 11 or whatever it was. I think it was 11. I would have not fought it that many times, but I do calculate that there is an element of, luck to it, because sometimes you can get into a trade and it just works right off the bat. Sometimes you get into a trade and it takes, 1, 2, 3 times and then it fucking works. Maybe it takes, 3 tries. You never fucking know how many tries these things are going to take. So, 1 tries. I can't spell for shit, so please forgive me. So you really never know. And you really never know if it's going to go all the way to target either. You just don't know. You just have no fucking idea. There's a point in time where you're going to get better. Like, you're going to get better at gauging that shit. Is it going to hit target? Is it not? Like, yesterday, I took a really stellar short. And I'm going to pull that up. All right, so this is from yesterday, Friday, the 10th or whatever, February. So the day was very neutral. And then there's an area I like up here. I call this a top tick, where it top ticks a prior pivot. And there's a lot of time in between. I mean, this top tick occurred at 9:22 all the way to 12:19. I mean, several hours between the deals. And typically on a trade like this, and the profile is neutral at that point, there's a good probability it's going to go all the way through and flush out the low side. So I did get in a position. I started getting in a position somewhere in this section. I don't remember precisely if it was like here. I think it was more right here near the 95s, to be honest with you. But as it rolled, what happened was it went to the midpoint. And for me, I know I need to scale on this trade at the midpoint. So let me just do this real quick. So the midpoint of this price range and the profile is right here at, 85s. So even though I know this has a high probability of going all the way through, I don't want, again, there's an element of randomness, and most of the time the trade doesn't run the target. I need to scale here. I need to cash flow something here. Because I know from this setup there is a time when this happens, and it's great. That's great and shit. But there's a time where it'll hit the midpoint, and it'll bounce the fuck back up. Which it did. Which it fucking did. And so I got out, but luckily we cash flowed right there. But since the trade rolled here, and honestly on this push right here, I thought it would actually go, but it didn't. But since it rolled the midpoint in this section where this red line is, I only had 4 lots left at this point. So I had 4 lots left to run it all the way through this profile. Well, what happened is it came up. I had to get rid of what I had left, those 4 lots. And I may have cut them a little bit earlier to where I picked up 6 ticks or something. Now that I recall it, I picked up like 6 ticks instead of letting it just break even. Because as this range flushed up, I knew there was a good chance it was going to come back to my entry. But as it was cycling up here, I realized there was an open to get in. So we got back in, and now I'm in, 8 lots again, or I don't remember what the size was, but now I believe it was 8, because this isn't really, it may have been 12, but either way, I got back in full size. So what was nice is, you know, I was in here and I took a lot of it off, but now I'm getting back in with full size because I needed this to happen. And that just, I have a video on expected value. You guys need to watch it if you have no fucking idea what I'm talking about. And I have another video on A+ trades. Those two are really good. What you got to understand is I needed this to happen. This could happen. This could fuck me. So I'm going to get out no matter what. Some of it. And it came back. And if I didn't do that, well, then the P&L would just be flat. So it comes up. Now I get a chance to get back in. But now I have a good chance of like running more contracts because of it rolling here, which I wanted to happen. Unfortunately, it didn't. When it puked out, it started holding again, which shouldn't have happened. And this is when the element of randomness and you just don't fucking know and an element of luck comes into play. Really, this shouldn't have happened, but it fucking did. Okay, it's very rare that this setup will do that again. But, to be fair, since it did do that again, I'm telling you, and the market hasn't opened yet, and if this video comes on before this opens up, there's a good chance that, for me, that we're going to actually bang through this. Maybe it will chop its way through. I have no fucking idea. Either way, it's going to go through, because I can't crystal ball this shit. I'm never absolute or certain, right? I just kind of look at this shit in probabilities. There's a good chance this could happen, but it might not. There's always a chance these things can't happen. And I think that's important for newer traders to kind of live in that mindset. Is just understand it doesn't have to do what you think it'll do. It could always fuck you. So, ask me how I know, because I've been fucked quite a bit over these several years of trading this market. To the point where it's like, you just never fucking know. So, but since it rolled here twice, kind of in this region, I mean, hell, it rolled the RTH VWAP. Since it rolled there twice, that makes the expected value of this even better than had it not rolled here twice. So now I'm more inclined to actually hit this on a full 12 lot. So this went from maybe an A trade at this point to an A+ at this point. Now I'm going to scale up size because the more certain things fail, the better it is in my book. Because you got to also think, why would that be? Well, I don't know, but we can speculate. There's a lot of stops trapped in here. Not only are you getting a lot of stops trapped in there, but you're getting them trapped here on this next go. And it's just going to blow out harder. So this made this better. Oh, but here's the thing, you know, I knew at a certain point when this rotated, this was very ugly. So I took it off. I took it off and I picked up, you know, maybe like 8 ticks on the full size. So I wasn't willing to let it come back. And that's a problem I've had. Is there's been a lot of times where I'm trying to get into these bigger trades, and I suffered an identity crisis when I was trying to learn how to hold trades. I mean, it took 2+ years of learning how to do it, and coming from the background of being a scalper, it's not easy to know when to do that. Learning to hold a trade, it really is it's a dark art. It's black magic. There's no, like, every trade's different. Sure, this setup that we looked at, that top tick, sure, I mean, I've taken plenty of those trades, but it's just a different flavor every time. It's like music, you know, you have rock and roll, and then you have hip hop. Each one of those is a different type of setup, but then you have a subset of a different song. So there's different hip hop songs or different rock and roll songs. So this top tick trade might be rock and roll, but what song is it? It's always different. So that's been a huge problem, is letting, there would be days, and it still happens, where I'm in a run and it just keeps coming back. So that's why for my trading style and system, it's always important to be scaling all the time. And yes, there could be a time where I scaled out a lot of it and then it does go to target and then I don't get the big payday. But again, understanding how these fucking things, the more they fail, the better they are. So therefore, the more they fail, the better they are, the more likely it's going to go past target. And the more likely I have a higher chance of actually, there's a better chance that I'm not going to be so aggressive at taking off the full clip. For this example, like this trade, like if it didn't pivot here and it kept going, I would have been more aggressive at scaling out near the low of day. But since it pivoted here and I had to get out of it, and if we're up here on Monday, well, now I'm going to probably not be taking off as much size down here. Now I know that there's a chance it could actually go fucking further. And I know that the fact that this trade pivoted here on the second X makes it that much better. So that's how I, at this point, am kind of gauging when to run more size further. And when they fail like this, sure, I didn't get paid as well on taking the setup as I wanted to on Friday. And sure, I had to take a lot off early on this first pivot because I knew it could rotate. Now that it's done all this fuckery, now it's better. And now that gives me more confidence to really squeeze them hard. And there, again, every time it came back, I didn't let it just ride to break even. Yes, there is a chance, and this has happened to me a lot, where it comes almost to break even, and then I cut it, and then the trade just fucking works. And it's like, shit, should have held. But most of the time, it hits me on break even. So what I want to do is try to, if I know that there's a very high chance it's going to hit my break even, because I'm watching the price action, I'm watching how expected value is shifting over time, because everything is dynamic and constantly shifting. If I know that there might be something where it's going to hit me in the break even and I can lock in 10 ticks, most of the time I'm going to take those 10 ticks, because what that's doing is it's just buffering the P&L more and more instead of letting it constantly break even. Because if it's constantly break even, that's costing money. And then let's say that we had more time in this session and this was setting up, we had another hour left right here, which we didn't, it closed up there. But let's say there was another hour up there. Now I'm really going to risk a stop. And because I cash flowed the other attempts, well, now I've built and buffered the P&L even more, that if I get stopped, it's okay. It might even be to the point where I could risk 2 stops in a row, but no more than that, obviously. Or just be a little lazier on management where I don't have to be as aggressive. But there's also times where I'm in a trade and it's like a very high probability, high expected value trade with great RR, but I'm already close to the fucking daily drawdown. And it really sucks because there's been many moments, especially more recently as my trading has developed substantially over the last year. And this has happened to me in the last week. Actually the other day. There were times where I couldn't risk a stop, but then I had a setup that was so good that I was willing to risk a stop, but I couldn't risk it in fucking the day. And it sucks because now I can't be loose and let the trade breathe a little bit, because there's just a point where this precision trading, it just doesn't work. there's a point where you can be as precise as possible. And somebody asked me this a few weeks ago. How do you get so precise on these holds? And I don't. I can get as precise as possible, but depending on the market conditions, if it's really choppy and sideways and it's like doesn't have good volatility, I can't overfight. I'm going to get fucking million paper cuts. So in those specific environments, certain conditions, I'm going to have to risk a stop. I'm going to try to be as precise as possible. And that's where the skill of learning the scalp and having that as a background has helped substantially. I'm going to be as precise as possible, but I'm going to have to let the fucking trade breathe at a certain point. So I'm going to get in as precise as possible, but now I just need to let it breathe. Maybe there's something behind me that can pivot the trade back in, right? Maybe there's something there, like a high note or whatever, where there's a good chance it could bounce off of that, and I get one free try to where it's not going to hit my stop, but I'm really close to a pivot point. I'm not going to go into details of how I find that shit in this, because this video is already long enough. But, and that's a whole nother topic. But, you know, I'm not as precise as you think. There's times where I can be, but there's times where I can't be. I've gotten so fucked up. I've been paper cutted to death on holds where I'm keep buying and buying and buying into the motherfucker. And let's say it's a trend up. I'm like, okay, it's going to go up. Well, I keep fucking buying it. And this is a good example of a drawing, actually. Okay, so like some of you might think, oh, scalping into a hold, it's the best of both worlds. No, it's not, because there's definitely cons to that shit. This has happened to me so many times. I think the trade, you know, I think we're going to go fucking moonshot in the motherfucker, right? But again, you never know how these entries are going to pan out. So, you know, maybe it's doing this shit, and then I'm like, you know, I get long here, and then I get the fuck out. And then it does this shit, and it's like, shit. And then I get long here, and then it does this shit, and I get the fuck out, and then it's like, fuck. And then it's like, ah, shit. And then it's doing this. I'm like, oh, I need to wait for it to get a little bit lower. And then it fucking does this, and I'm like, ah, fuck. And then I get long on this, and then it goes, and then it goes, and then it comes back, and then I get out. But it never comes back to this original fucking entry, and then it finally goes. And it's like, you know, I missed it, or by the time I'm actually in the fucking thing, it's not even the same trade anymore. The risk to reward isn't even there no more. And that's the problem with scalping your way into these trades, where it's just, there's a point where you just got to let it fucking breathe. And depending on what that is, I need to just give it a moment. So, you know, you scalping your way into holds isn't always that good. Obviously, you need to know what is a good trade, and this is definitely more advanced and shit. So I want to pivot back to talking about, you know, sometimes there's a high risk reward, high EV trade, and again, this happened to me the other day. It's just like I can't fucking risk a stop on it anymore. If I do, I'm done. And that's when I just got to start floating it and just be more aggressive about scalping it out and just not allowing it to go to target, and just start buffering the P&L as much as I can. So if there's a really solid setup and it's at the point where I know there's going to probably be a good high probability setup before the session starts, because one of the biggest goals of this year was to gain clarity on what these trades are, where I can scale size and really run the target. And again, it's been a very long journey. It's been brutal on trying to figure out what to fucking hold and when to hold it, when not to hold it. And I mean, if you don't give up, you eventually figure it the fuck out. But I've suffered with a massive identity crisis. To be honest with you guys, if I just stuck to scalping, I would have probably been doing a lot better a lot sooner. That's Womack. What you doing, Wall? You floating through the wall, boy? Floating through the wall, boy. So, you know, it just like gaining the clarity. I would have done a lot better if I stuck to scalping a lot sooner, but once you see big trades, it's hard to unsee them. And it's been a motherfucker to learn how to do it. So I know some of you are suffering in the realm of attempting to hold trades. Took me fucking years, and now it's finally starting to get more fucking clear to be able to do that. And it's to the point more recently, as of 2023, that I'm like, wait a second, all my best trades, like the moonshot video, if you guys haven't watched that shit, you need to go watch that. But it's like that $14,000 trade, that was many days in the making. So now it's to the point where I'm like, wait a second, these really fat hits that go forever are multiple days in the works. So that's when I'm more inclined to actually be hitting on 12 lots. So I'm kind of concreting my rules on when to hit 12 lots, because, you know, there's points where I'm trading it when I shouldn't be, which gets very dangerous very fast. But anyways, so that's what I'm noticing is there's these really good trades, but they're usually days in advance. Yes, they can set up intraday. There can be really high quality shit that sets up that specific day, but it really sucks going into the best fucking trade of the day, even the best trade of the week, or even the best trade of the month at times. And that P&L is not padded. It's not thick enough. And you're gonna you could fuck the day. You could hit your max drawdown because you just don't have enough padding to fight for it. And those are the trades that make money, for me at least. So it's very imperative, and that's what I've been noticing recently in my trading, because I'm still developing. I'm not a pro. That, man, like the other day, it's just like, dude, this is such a good trade. I want to risk a stop. I want to risk a stop on it, but I can't. So now I got to be aggressive. Now I got to keep scratching at it, or picking up a tick, or picking up a tick, or picking up a tick, just so I don't fuck the day. And then now I'm trying to pad myself on the best trade of the fucking day. So bankroll, managing your bankroll is very important, in my opinion. It's important to be buffered for the best shit. If there's good trades, but I know a better trade's about to set up, then instead of squeezing that trade for everything it's got, let's just be a little more aggressive at taking it off and start buffering the P&L, building a pad, because this next trade is going to pay a lot more if I can get it to work. Because, again, there's an element of fucking randomness, and these fights can get ugly at times. And there are times where I want to fight fucking 8-10 fucking times. And that's what you saw in that P&L example earlier in this video, where I fought my ass off because I knew what that could be. And it fucking worked. Unfortunately, I cut it a little too early because I knew there'd be overshoot. But it is what it is. Anyways, guys, I hope you enjoyed that, and then we will see you in the next video. Until then, check out these videos over here.